Welcome, everyone, to the Real Life Trading program, where we are going to be interviewing my buddy, Dan Grill, who's a stock trader that lives a couple of miles from me. Thanks for watching this video. And don't forget that I would like to encourage you to be good. And by good, I mean get out of debt, achieve your financial dreams, and give generously to your community. Drake says, good thing I am live, just in case. Yes, Drake, good thing that you are alive. All right. I probably read that out of context, but it's all good. I mean, it's not like we're recording. Oh, yeah, we are. What's up, Dan? Hey, I'm going to stop sharing so you can share your screen. And while you are sharing your screen, man, tell us a little bit about yourself.
All right. Hi, my name is Dan Grill. I have a background, my degree is chemical engineering. So when I'm not trading, I've been working as an engineer for the past 25 years. But I've been trading on and off for about the past 20 years. I got started in the late 90s. Thought it was interesting. It was kind of a big day trading craze back then. That kind of tells you how old I am. But through family and jobs, I've kind of gone on and off, but I've never really lost my interest in it. So over the past several years, I was traveling a lot for work. I decided to be a contractor. I had my own engineering firm and was traveling quite a bit for work, doing work at pharmaceutical companies and basically contract engineering stuff. But this past December, I decided that I was going to take some time off. I'd saved some money, so I have a pretty nice sized account to play with. But I'd like to just kind of stay home. My one kid just graduated high school, another one's in high school. So I've spent this year trading again, getting back into it, and just love it. It's great. I'm doing all right this year, enough to pay the bills, so I don't have to go back to work yet. So that's a good deal. My main trading style is I basically do like day trading and swing trading. So I've got two accounts. One is more of a day trading account. That's the margin account. The other one is a retirement account that I've rolled over from previous 401ks and IRAs and that sort of thing. And I use that for swing trading. I mostly use options. Very rarely will I actually buy or sell stock. Back in February and March, when the implied volatilities on options were very high, I did use stock more often. If you're not an option trader, IV just is simply how expensive an option is based on the demand for that option. So when it's too expensive and I think it's just not worth it, you can lose a lot of money if the IV collapses while you own that option. So I'll trade stock, which doesn't have that problem. But typically I will trade options, and mostly it's long calls or long puts. Sometimes I'll do spreads, but mostly it's just directional, long and short, the market based on buying calls or puts. All right. So, I'll share my screen now. I think this should work, right?
Yeah, it should work. So you said you do both day trading and swing trading. When you're in swing trading, do you have positions that you've held for years and years and years, or are you in just for like a couple of days or weeks or months, or what kind of swing trading do you do?
The swing trade for me would be anywhere from overnight to a few weeks. Okay. And again, with options, you have to be careful because you have time value working against you with options too. So let's say I buy an option that's a month out. Between now and that 30-day time frame, the time value or the value that's added to the option price based on how much time is left until expiration, that decreases pretty exponentially over the final 30 days of an option's lifetime. So for a swing trade, I'll buy like 2 or 3 months out. For a day trade, I'll typically buy within the same week option expiration. Mm-hmm. So yeah, my longest holds would typically be for an option hold would be probably 3 to 4 weeks at the very most.
Gotcha. So you'd buy 2 or 3 months, but likely hold for a month, maybe a month and a half?
At the most, yeah. I probably wouldn't go more than a month.
Gotcha.
Again, if you look at the curve of depreciation on the time value, it's flat when you're longer out, like 3 or 4, 5, 6 months out on an option expiration. But as you get within that 30-day period, it drops real fast.
Right.
So unless you're in the money on the option, you're going to lose value even if you're right on the direction of the stock. The option will lose money because of the time value premium.
Cool.
So that's just stuff you learn either by studying it or finding it out the hard way, which I've done both.
Yeah. Me too. Me too. You got a lot of stuff on your screen there. Can you tell us about it?
Sure. Yeah, this is one of my screens. This is my TC2000 charting screen. I'm mostly a technical trader, so let's start there. Because I'm a shorter term trader, I don't look at the fundamentals as much. And based on what I can see with your program, Brad, I see that you guys are largely technical as well, which is good. That's a great fit. So the chart or the screen you see there is my charts and my screens, my technical indicators that I've either grown to use a lot or the ones that I've developed myself. And I'll show you those. My actual order entry screen looks like this. Can you see it?
No, we're seeing the black screen with all the different windows on it. Did you drag something over?
Okay. Yeah, I dragged something over, but I guess
yeah,
you can't.
no, it's coming in on my other computer, but not my main one. So.
Well, basically, it's just an option entry screen through Schwab. So I have my accounts through Schwab. So what we're looking at here is not my order entry screens, but this is what I use to make decisions. So what we're looking at here on the far left side, I've got a watch list of about 50 symbols that I kind of try to concentrate on. I found that if I have a huge watch list, like an option trading universe, like over here, it's just a lot to really get to know. I've created some specific indicators here for myself, and these four columns that we're looking at here, these are basically from an Ichimoku charting style, and you can see that demonstrated in all the charts. These clouds are the Ichimoku system. So that's one of the systems I use. If you guys want to get into it, I'll be happy to explain it. Otherwise, these are symbols, these are indicators that I wrote that tell me when a stock is above or below the clouds. So that kind of gives me a heads up as to which direction I might want to go on that trade.
Gotcha. So so when it's inside the cloud, does that mean that it is indecision time, or does that mean it's rested? And then when it's outside the cloud, it's breaking either up or down, or?
Yeah, yeah. Inside the cloud is sort of that indecision time. It is a non-committal area, so that's not even an area of focus that you want to look at. What you want to see is whether the market or the stock price is above or below the cloud. And for example, we're looking at AMD, and that's clearly way above the cloud. This is a daily chart. So real quickly, the chart you see here in the top is daily. Then I have a 60-minute, 15-minute, and then I use this bottom one for the 1, 2, 3, 4-minute, 5-minute.
Okay.
All right, so that's kind of what I'm looking at from a real short-term time frame. But if we look at if we look at like Apple, something that's real active right now, it's in an uptrend. You have these two lines here. You have the base and the conversion line. These are essentially sort of like moving averages, but they're calculated differently. And the way you read an Ichimoku chart is you look at the cloud. If the stock or the market you're looking at is above or below the cloud, that tells you the trend. So I would generally take short entries, for example, down here, if it's below the cloud, or
Dan,
long entries if it's
Dan,
above.
just to pause you for a little bit. I got two computer screens on here. The one that's recording is still showing AMD, and the other screen has refreshed to Apple. So for those of y'all watching the recording, there, I just switched to Apple. Okay, bud, sorry. Continue.
Oh, okay. So I guess we have to be cognizant of a little bit of a delay.
Yeah. I'll work with you. We'll make sure that the folks watching the video are seeing the right screen. But it is the right screen now. So go ahead and say what you were saying. Is that a signal when it breaks out of the cloud, like it did there a couple of weeks ago?
It can be, yeah, definitely. So, for example, with Apple, it's interesting because if you look at back in July, actually it was in beginning of May, it did break out of the cloud, but then it came back, and oftentimes the cloud can act as support. So an Ichimoku system is not as complicated as it looks. The cloud is kind of your line of demarcation. So if the market is above it, you want to take any long signals you might have from any other systems. Below the cloud, you'd want to look at only going short. We've been in a very strong uptrend, especially with Apple. The market itself has been the same. So I just switched over to SPY. I don't know if that'll come in yet or not.
It has on my monitor, and I think the computer that's recording is in the process of switching over. And again, I don't know if it's recording what I'm seeing on my screen or what is actually going on the webinar.
Okay.
in the process of moving. Just
All
going
right.
slow.
Well, I'll just keep going forward here. I'll kind of keep giving you an update of the screen if this is what you're interested in.
Yeah.
Basically, I have my own custom indicator here, which is based on relative strength. And I look for divergences in that. And that's when I would go long or short on a daily, like a swing trade, a daily time frame. Over here, I have different watch lists, and these are all custom indicators that I've created based on Bollinger Bands, based on relative strength, based on candlestick patterns. So I wrote sort of a mathematical formula for like a doji candle bottom. I don't know if we have any today or not, but here's one, for example, that I have that is a doji candle bottom. So essentially what it looks at is if you have a doji candle that's kind of lower, it should be more of a downtrend, but I have that filter kind of loosened so I can see them all. So this is what I look at every night and a lot during the day. So I'm looking at these different filters. I don't want to go through all of them, but I have like percent in range, percent distance from the 100-day moving average, from the 200-day moving average, note dates, like when I've had notes. You can see some of these notes. I haven't given a note since 2005 for UPS, but lots of other ones have notes. And these other charts here, I keep this one never changes. So if I were to click on a symbol, like I want to see the technology ETF, I can click on XLK and it will change only the left-hand charts. I keep SPY and Qs up all the time. I also have a longer term view. So this is like the past couple of days of those. So I'm keeping an eye on the markets the whole time. Again, these are two custom indicators I have down here. And then over here, I have the advance and decline lines. So when there are divergences in those, that's usually a good heads up that there's going to be a market turn. Right now, they're pretty much correlated, so there isn't much information there. But in the past, we have seen some divergences.
Now, when you say divergence, are you talking about when the market is making higher highs, but your indicator down there is making lower highs for like bearish divergence?
Yeah, absolutely. So when that takes place, let's see here. All right, here we go. So, for example, a couple of days ago, we had the advanced decline line came up just barely a little bit, but the market itself went up pretty hard. I think there was some tariff news. Maybe this was the Mexican deal, I forget. But this indicated to me that there was probably going to be a reversal, and there was later in the day. So this is the SPY versus the advanced decline line for the New York Stock Exchange. So here's another very good one here. So here's, if you guys can see this, there's a flat line on the green line, which is the advanced decline, but the market kept making newer highs, right? So this is September 7th intraday. This is a 1 minute chart, or 3 minute chart, I should say. And you can see that the divergence was here. That indicated to me that there should be a pullback in the market, and you can see there was a huge pullback right here. Right. Yeah. So that's kind of what. So I look for those during the day, and you'll get maybe one or two during the day that are significant, and they usually work out. They're pretty helpful.
So when you see that, what is your entry signal, or do you just buy a put and hold it?
Depending on how confident I think that signal is, I'll either put on a full or a half position on the calls or puts. Mm-hmm. If it's kind of a weak or maybe developing divergence, or maybe it's just not long enough, it's only a few minutes long, I'll probably put a half position on. And then I'll wait and see if it fulfills, and then I'll put the rest of the position on after that.
Gotcha. Cool.
So right now I'm not seeing a whole lot. It's been pretty bullish, especially since that tariff news came out this afternoon. We've been pretty much heading up in both of these. So now this is live. So you can see now we have a potential pop, potentially going up in the market, I should say, because we have some good relative performance on the advanced decline line here. Again, that's not quite enough. That's only like 5 minutes worth of data. So I would let that play out a little bit. SPY has some resistance right now around 89.20. So if we can get through that, we're probably going up some more. So that's the kind of stuff I would look at from an intraday basis.
So if you were to share that with one of our listeners, basically what you're doing is on a 5-minute chart, just for example, obviously you're on multiple time frames, but maybe if you're looking at a 5-minute chart and you see some bullish or bearish divergence, then you can react on that. And we use, RSI and stochastics when we're looking for divergence.
Yeah, exactly. So here, while you were talking, I just noticed another one. The one below it, T2126, is the NASDAQ advanced decline line. So I've got the Qs in blue here and the NASDAQ advanced decline line in green. So as you can see, green is making at least a new high, if not flat. So it's slightly higher, while the Qs are lower, right?
Mm-hmm.
So to me, that's a pretty good divergence. If that holds, and I've got other indicators too, which is the up and down volume and up and down issues for NASDAQ and NYSE. That's on my other screen that I don't know if it works if I pull it over there.
It does. There'll just be about a 10-15 second delay.
Okay, I'll leave it up here. So as you can see, we have a positive or bullish divergence on the NASDAQ right now. Over here in the Qs chart, we have a resistance around 8250. So to me, if we can bump up against 8250 and we still have that divergence, that's a long after 8250. So I would take a short-term trade on that.
And when you say short-term trade, you're talking about 5 minutes, 15 minutes?
Well,
3 days?
for the
What's
day.
short-term to you? For the day.
No, for the day, yeah. I mean, the general rule of thumb with charting is that the smaller the time frame you use, the shorter your trade is going to be.
Right.
So I'm looking at 1-minute charts here, and I would want to be out of it certainly before the end of the day, but most likely within 10 or 15 minutes.
And then what is your target for exiting?
Well, I would look at the chart. Like on this one, without messing up, I brought over another window. So without changing, well, okay, I'll go ahead and do it. I would look at like how does it react around 82.76, because that seems to be the next area of resistance, right? So that's after the pop we had earlier today. It got up to 82.76, 77. So I would see how it acts there. Is it still strong? Is volume increasing? Are we getting any kind of a push? Or should I just take profits here? So that's what I would look for. If a pivot point were close, I would look at that. I don't see a pivot point close. It's at one right now, but I don't see one. If we scroll through, yeah, it's much higher up. So yeah, the first point I would look at, my target would be around 75. So I would say 82.75. Let's take 25 cents on that from the 50 breakout. Now it's quite possible that because this has been resistance the past several minutes, it doesn't break out of it. Mm-hmm. So I would want to keep watching down here. And so far so good, but we do see the advanced decline line pulling in a little bit, and we're still stuck at 82, 34, 35 right here. So it's at a pivot point, which is kind of a magnet. It does draw reversals a lot of times. If it breaks through that 50 level, then I'll be looking at 75.
Cool. Yeah. So you're just looking at the next couple of resistances. And do you ever put like a limit order out there at that resistance, or do you always just sort of wait and watch it and see and then do like a market exit?
Generally, it would be a market exit, because unlike trading stock, like if I were trading this as a stock, if I were just buying the QQQ shares, I would know that my target is 75. I'd put an order in, watch it, and make sure it doesn't go haywire and drop like a rock. But with options, you're not really sure what that option price is going to be at that level. I mean, you can do the quick calculations, but because of delta and gamma, some of the Greeks involved with options, you can make an estimate, but you just want to watch the market. And there is a level 2 screen where you have the bid and the ask for the option price. So I'd be watching that, and as it gets close to that 75, I'd be looking at it and saying, well, it looks like this is what the market is going to be, a couple more cents at 75, then I would put in my my offer to sell at that price. Gotcha. So yeah, I wouldn't do it at the time of trade, because it's hard to say exactly what that option price would be.
Very cool. How do you manage your risk when you're going into a position? Do you use buying power, or how do you manage your downside?
I use a certain dollar value as a maximum for how much I want to put into a trade.
Okay, now is
because
that
options can go to zero, and it won't happen immediately. But I'll risk a certain amount of money, and that's how much I'll put into it. And if I get my stop loss will be at some sort of a technical level. So it's not always the same dollar value. I know a lot of people would say I just want to risk $300 or whatever, but for me, I'll kind of size my trade. Like I can go up to a certain amount based on my rules, but I will size it so that, for example, in this case, Qs, if it drops below, let's say 82.15, which would be support on a very short-term level here, of course, then maybe I'm risking $300 on that amount. So I would try to quickly calculate how much I can put into it to risk that much on the way down. And again, with option pricing, it's not linear like stock pricing is. So it does change with the price of the market. Right. But yeah, I would definitely want to size my trade so that if it does break that 82.17, 82.15 level, or maybe even I'd go down to the VWAP down here. That pink line is the VWAP. Mm-hmm. If it hits that and goes through it, maybe I say 82, then I'm out. And I'd want to make sure that wasn't too much money.
Right. Yeah, that sounds similar to what we do, which you alluded to earlier. So this is mostly your day trades. Are your swing trades pretty much the same thing, just on a bigger time scale? Or do you have different strategies for swing trades?
Yeah, the day trades would be more based on my nightly research from the daily charts. So for swing trades, I definitely use daily charts. So let's see, what am I in right now? All right, I'm in AMD. And if this comes up, I see a negative divergence with my indicator here. And I have shorted this before. I shorted it, I think it was around 27 when it first popped up. I thought it was just overbought, and I still think it's overbought, but it's really strong today. So the swing trades would come from daily chart analysis. So I'd be looking at these, like BABA was a good one. I shorted this one a few days ago, because I saw on a daily chart it had broken this support, right? So it was pretty strong. Volume was up on the breakdown. So I shorted it for probably 7 or 8 points in this area here. I don't know if you guys can see that yet, but on the BABA chart, once it broke through, looks like about 165.5 area, that was long-term support going back all the way to last year, all the way to December. All right, so it did break down. It's had a good day today because of the China tariff talks, because it is a Chinese stock. But yeah, that's an example of a swing trade based on looking at the chart analysis.
Gotcha. Yeah, I'm looking at the cloud indicators and how those align with the your divergence lines.
Yeah. All right. So good. So if you see the BABA chart is definitely below the cloud, right? So you would want to be looking at only taking short entries. And when it has these little bumps up, like it did at the end of August, it had a nice little pop up. It still couldn't break the moving averages. White is a 50-day moving average. Blue is 200. Orange is 100-day moving average. So you can see the 50 cross down through both the 100 and the 200. So that would have been a good short if I were watching it for a swing trade at that point. It couldn't even get back to the 50 and broke back down. So because it's below the cloud, I'd only be looking for short trades on that one for swings.
Cool. If there are any of the attendees that want to ask questions, go ahead and type those into the chat pane. So Dan, I'll just go ahead and share with you, and on the recording here, I had a great month in August, and as soon as September started, I got myself on a bit of a losing streak, where when I lost pretty close to what you would call a full position, what we call a full R. And on the ones that were winners, they would go to my target and then reverse just before my target, and I'd end up trailing out for a small win. What do you do either with your trading or mentally when you're on a little bit of a losing streak?
Oh, that's a great question, because everybody gets on those. And I think there's an old adage in the market that says it's okay to be wrong, but it's not okay to stay wrong. And what that means is basically we all make bad trades. I think I've had almost 300 trades this year. I think I'm up to 280 when I do my spreadsheet accounting. And my win-loss record is 67%. So I'm right at 2/3, which is good. But earlier in the year, I was doing great because everybody was doing great in January. Then I started losing much bigger than I was winning, and I had to I had to kind of sit back and reevaluate a little bit. So I think the best answer to your question, what do you do when you get on those kind of down streaks? You just have to stop. You have to stop and reevaluate and try to. And for me, what worked was going through my trades, individual trades, looking at each one, and saying, what did I do wrong? Why did I do that? Why did I think that made sense? And it's basically a process of educating yourself. At the time, it seems like a good idea, but if you look at the trade like maybe a month afterwards and you go back to the chart, and maybe if you're a news-based trader, you look at the news, what caused you to get into that trade, you can really learn a lot, because in the heat of a trade, you can oftentimes not see the full picture with the perspective that you see outside, months after, weeks after the trade. So you learn a lot by doing that, and it's kind of painful because I had my biggest loss in March, the biggest one I've had for the entire year, and I've made all that back, but it was really painful to get back. And what I learned from that is I just added to a losing position. It was an option that they expired worthless because the market never turned the way I expected it to. And I had to evaluate, and I just told myself, all right, that requires some sort of discipline. I need to limit myself. I'm not going to buy that many options that, in that far out of the money, that close to expiration, blah, blah, blah. So it helps you define parameters so that you can at least learn, write it down, put it in a trading journal, remind yourself, give yourself 10 commandments, whatever works for you, and trade by those. And we all know that trading rules are required. I mean, you need those. What they are independent to you. I mean, they're whatever works for you. So yeah, I basically took some time off after, what was it, probably May and June. I took some time off trading. I didn't look at charts. I just kind of thought about it. I wrote stuff down in notebooks, with actual pen and paper. Had some ideas. Then I opened the charts back up, made some of these custom indicators that are working for me now. Just kind of came back with a new perspective and put some dollar discipline in too, money management. Don't let losses get to a certain point. Take the loss, enjoy the loss. Before I hated to take a loss because, like everybody, you hate to be wrong. Excuse me. But being wrong is not really the problem. The problem is being wrong continuously and staying wrong, like I said before. Yeah. So taking the loss is good. So now I cherish it. I relish the idea of taking the loss because it makes me feel like a better trader. It makes me feel like I'm doing the right things.
Absolutely.
And there's one thing I remember from 20 years ago when I first started trading. I was in a chat room. It was some pump and dump guy named Tokyo Joe who was running this chat room. He got busted by the SEC eventually, but we were all in this chat room. And this guy turned out to be a real joker. But some other people in the room I learned a lot from, and from their entries, their exits. And I just remember some guy writing that he bought a stock and then went against them and he cut his loss immediately. And I said, oh man, I need to learn how to do that. That guy is going to be I don't even know who this is, but he's going to be a good trader because he cut his loss and he doesn't care. He's okay with it. And I knew I had to get to that point, and I never did at that time, but I am now. And it's not about being wrong. It's about saying, you know what, that trade just didn't work out. Everything's set up correctly if you followed your rules, and it didn't work out. It's okay. You just cut the loss, because any money you have left in a loser is not money that can be put into a winner. And that's how I look at it.
Yeah, that's a great philosophy. Hey, August has a question for you in the chat pane. Says, if the trade looks great, will you increase the amount you spend, or do you stick to a certain amount always?
That is a good question, because you do have to be flexible. I mean, we talk about rules and we talk about boundaries and discipline and that sort of thing. But you do have to kind of be flexible. So yeah, I will increase if I have to, but don't forget, if you put on your normal position size, you can always add to it, just think of it in terms of, if you're right the first time, you could be right the next time as it's moving in your direction. So I don't worry about how big, like, am I going to miss a big move if I don't get everything in on the first entry? Commissions are so low nowadays, and I think you guys are using IB, right?
Yeah, me personally, I use interactive brokers. We have a lot of folks that use Thinkorswim, Robinhood, some use Schwab.
Right. Yeah, so commissions are low enough that it doesn't really hurt you to maybe put on a regular size position, even if you think it's a great move. The move hasn't happened yet. And especially today, we have a professional tweeter as president, and we have, world markets, currencies and emerging markets are bad. There's a lot of headline risk is what they call it, right? So even though a trade might look good at the moment, anything can happen. Like today, we had there are algorithms that read news headlines. And there was a Wall Street Journal headline earlier today. I think you guys saw that Chinese tariff talks might be reopened, so the tariffs may not be implemented. Well, that went against any shorts by a whole point on the S&P. So on the on the spiders, but it came right back down. But I mean, if you had put a whole bunch of money in because you think, oh, this is a good short, we're looking great, within 5 minutes you would have been either wiped out or stopped out pretty well. So yeah, for me, to answer the question, I would definitely consider adding more if I think it's really big, a really good opportunity. But I would actually more likely put on a normal size and keep that risk low until it moves, and then I'd move up my stop and add more to it.
Yeah, we call that add reduce. So yeah, sounds good. Now you talked a lot about when you how you recover from, say, a losing streak. When you're on a winning streak, how do you decide when the winning streak is over and when you're still crushing it?
Well, I think the market tells you when the winning streak is over.
There you go, bud. Great answer.
Yeah, I mean, if you're just paying attention, there are times when you feel totally in sync with the market, and there are other times when it's going against you and it seems like nothing is going right. So yeah, I mean, when you're on a winning streak, it's great. I think I had 18 in a row back in January and February. And just as an overview, I'm kind of a bear at heart. I really prefer the short side over the long side. So February was really good. But on those big bounces, you keep thinking, well, I'm going to short every bounce and sell into it. Well, that stopped my 18 win streak.
Gotcha. Cool. Yeah, we still have quite a few traders in the room. Feel free to type in your questions. We talked about what signals you look for. We talked about your trade mentality. If someone was just learning how to trade, what advice would you give them?
Just starting out?
Yes.
Well, the first thing is what happened with me is I read a ton of books about trading, everything from stocks for the long run to short-term trading to options. I was really interested in options because I didn't have very much money at all at the beginning. So options were attractive. I would definitely say practice trading without real money. There are tons of places that allow paper accounts. So I would practice that. I would develop a system that works. Think about, are you a longer term fundamental type investor like a Warren Buffett? Or are you more of a short term trader that's more technical? And if that's the case, then I would dive head first into the charts. And if you're fundamental, I would learn how to call into conference calls and read 10K, 10Q reports. So whatever makes you more comfortable. I'm more visual, I guess, because of my engineering background, but I'm more visual, so charts make a lot of sense to me. So I've learned as much as I can. I've read as many books as I can, and I look at charts. I probably look at 200 charts each night when I can, and that's just to get a feel for the markets. So if you're just starting out, I would say read as much as you can, learn as much as you can, and then concentrate on whatever side, technical or fundamental, you really think is best for you, and just absorb as much as you can from it. Paper trade till you're comfortable. It's not going to be the same as real trading with real money because your emotions tend to take over a little bit when you're trading real money. But as you do that, you'll develop rules that'll help curb those emotions, and the rules will help pretty much keep you in line. You'll break them, but with the rules that you have for yourself, you can take some of the emotion out of it.
Awesome, dude. Ram is asking, when you do an options swing trade, do you buy your options at the money or out of the money or in the money, or how do you decide which strike price you're going to purchase?
That is a great question. Not many people ask that type of question. I usually buy right at the money, which gives me a delta of 50. And the reason I do that is because typically the at the money options are the most liquid, right? So you get a pretty good bid-ask spread. And I generally trade high liquid options anyway. So you got Apple, AMD, BABA. I'll buy at the money, which the 50 delta means that if I'm buying a call, if the stock goes up $1, that call will go up about 50 cents. Okay. If it's instantaneous, then time value, excuse me, doesn't count against you. There'll be a 50-cent move for every $1 move in the stock. Excuse me, and that's up or down. All right, so that kind of gives me a little bit of wiggle room too. If you're buying deep in the money calls, you're essentially buying a proxy for the stock itself, because the delta is going to be very close to 1, which means that for every $1 the stock moves, your options will move by $1 as well. Well, the reason I like the at the money, aside from the liquidity, is that if the stock moves against you by, let's say, $1, your option only goes down 50 cents. All right, so you get a little bit of a cushion. It's sort of like a friction. So if your stock is going against you, you're not going to lose that full amount that the stock has moved. You're going to lose half of it because your delta is 50. And the other benefit, based on how the Greeks work, there's a model called the Black-Scholes model that models option prices based on various factors. The lower the price goes below the current strike price, the less your delta is. So like right now, if I were to buy, let's use an example. If I were to buy an option on the Qs, if you can still see my chart, it's at 182.50 right now. All right,
Okay.
so
we're seeing BABA right now, but
okay, so you can see BABA over there. But if I'm looking at the Qs in this area over here, can you see where I'm looking?
oh, the middle of your screen, a little bit towards the bottom. Yes.
Correct. Yeah. So Qs are at 82.50. So that's probably a strike price, right? So I'll check and see what that is. All right. So if I look at options for next Friday, there is an 82.50. The delta is 0.49. So that's very close to 50. Options are 164 by 166. So $1.64 to $1.66. So for one option, I would pay 165 bucks for that. As the market moves against me, if Qs came back down like it did earlier today, let's say it comes back down to 182, my delta would actually go down to about 45. So there is more of a cushioning or sort of a friction if the market goes against you. You're not going to lose a 50 cents per dollar move in the option if your delta reduces down to, let's say, 40. At 182, your delta is going to be around 40 to 45, so you're losing less money for every point move. So that delta works for you in both up and down moves, because as the market goes up, your option delta goes up as well. So
right.
Let's
so
say
when you're
by some miracle it goes up to 185, my delta is probably going to be, well, I can tell you, the delta for 185, well, it's going to be a lot higher. It's going to be probably close to 60 or 70. So for every point move in the market, you get 60 cents or 70 cents on value on your options, right? So the delta actually helps you if you start at 50. And that's why I like it. So, and that's what that rate of change of the delta is called gamma. And there are a lot of folks who use gamma as a trading technique. There are different ways to use gamma, but that's essentially the rate of change. How does delta change with the change in the market? And I like to use that in my favor at 50, because it helps, it kind of accelerates as the market's going in your favor, and it decelerates your loss as the market goes against you.
Yeah, so when you're right, the value increases very quickly, and when you're wrong, it decreases in value slowly.
Correct, and it slows down as you're wrong. So the more you're wrong, the slower your value decreases.
Right.
Which is not to say anything of the time value. Now, if you're wrong for a week or two, your time value is going to kill you anyway. So you got to be careful. So options are great for short term because you're not really biting the bullet too much on the time value. You're not going to lose a lot.
Awesome. Charles is asking, why did you pick the cloud as your primary indicator?
It's one of my indicators. I like Ichimoku because, well, let's go back to that earlier question. What would I recommend as someone starting out? There are two types of indicators. The cloud, the Ichimoku cloud, is a trend indicating system. So it basically says if you're above the cloud, you're in an uptrend, below the cloud, you're in a downtrend. But there are also oscillators too. And the market tends to move in generally one of two different high level generalized manners, either trending or flat and sort of kind of up and down. When it's in a sideways type motion, oscillating indicators like stochastics or MACD or RSI, they tend to work well. They'll tell you oversold and overbought conditions. But like RSI will generally not be really good in a trending market. So to answer the question, I'm using the cloud based as my trend determining indicator. So if the clouds are moving or slanted up or slanted down, that means my trend is pretty good. And I can see which trend I should be, or which side of the trade I should be on based on whether the market's above or below the cloud. So that covers me and it's very visual. As you can see, it's very easy to spot immediately. If you can still see BABA here, once we were above the cloud, that anything there should be a long. Now, I might want to use RSI or some other indicators to determine when I go long, but I wouldn't normally take a short above the cloud and vice versa. I wouldn't take a long below the cloud. So that helps with the trend part. The oscillating part is what my relative strength indicator helps with down here. So for example, like right here, this would have been a short for me because we're in the cloud. It hits some moving averages, and that if I were looking to swing BABA at this time, I would have taken this short because it hit some resistance. It's inside the cloud. It's definitely in that no man's zone. But as it started to break down, it comes through the cloud, and we are at a very high level on my indicator here. Coming back in is the next logical step. And that would have been a great short had I taken it. I didn't, but that's just kind of how I read this.
Awesome. Al is asking, do you mostly buy or sell premium? I guess we talked about you mostly buy. Do you ever sell options? I think you said you sometimes do credit spreads.
Yeah, I'll do spreads sometimes when the IBs are pretty high. And it sounds like your folks are pretty savvy in options. So yeah, when the implied volatility gets high, especially, I keep an eye on the VIX. That's in one of my other charts here. When volatility goes up, well, when the market drops down or there's more fear in the market, supposedly the implied volatilities go up. So I keep an eye on the IV for SPYs. If I do have a directional trade I want to do, I might sell another option again. Like I'll sell a call above the call that I'm in if I like the long trade, but the calls are too expensive because of IV. Yeah, I'll sell another call on top of it. It does limit some upside, but it reduces the cost. Because you're selling an expensive option against buying an expensive option, it helps to keep your trade neutral in terms of cost. You're not neutral directionally because it's still a bull or a bear spread, but it does help defray some of that IV cost. 90% of the time I'm doing just directional buying premium, buying options.
Awesome. August wants to know, what is your monitor size? Because it has a 27-inch screen. It doesn't think that it could fit it all in.
It is a 27-inch screen. I've got 3 LG UK 600 27 inchers. And it is the 3820 by something. I'll look it up here real quick. It is 3840 by 2160. I'll move this over around here.
It says 3 by 27 inches is the key. Ram has a question.
I don't know if it's the key, but it's what I use. I like it. It works for me.
Ram says, I'm a beginner and trade naked calls and puts. Is there a safer strategy? How would you answer that one, Dan?
Yeah. I would not be trading anything naked as a beginner. Where do I even begin with that? I don't trade naked calls at all. I mean, even if I sell calls, I'll have underlying stock just as a covered call. I've never gotten into the naked calls or puts. I know that this person, you're probably on Thinkorswim. I know they do a lot of naked puts. I've never been into it. I just don't think it's safe. You have to really, I mean, if you're good at it and you make money from it, I think that's great. Please do it. But you have to understand the risks. And when you're naked, what you're saying is that I'm selling you a contract. I'm selling you the right to sell me stock or what have you. And, you know, you just have to watch your margin requirements with that. It's not for me. I've never really thought that was good. I think there are way better strategies to get to your second part of the question. Either directionally, or if you really think premium is the way to go, then, you know, sell spreads. You know, sell call spreads or put spreads. I don't know if you're set on selling naked, but spreads can bring in plenty of premium with much less risk, in my view.
Yeah, so for me, my view, I'd say naked calls have a really high risk because you know, the higher the stock goes, you have to cover the distance, the difference, and there's really no equity there. If you have a naked put, you at least get to hold the stock when it's all done. But yeah, like Dan said, if you want to sell a call, or sell a put, you can always buy one on the other side as your insurance. But yeah, with those naked positions, your risk is not always easy to limit. But if you do directional trades, like Dan was saying, like he buys calls and buys puts, then it is much easier to limit your downside. So Ram, feel free to email me, brad@reallifetrading.com, and we can start a conversation, or hit me up on Slack @BradReed, and we can start a conversation about how to limit your risk. That would be no problem at all. I think I've gotten to all of the questions in the chat pane, so if you got some more, type them in very quickly. Dan, thanks for being here. Any last words before we end the recording?
Well, good luck to everybody. If you have a mix of new folks and experienced folks, make sure you're helping each other. That's important. None of us are experts at this, and they certainly don't teach it in school. So make sure you're helping each other and use money management. You know, don't worry about missing a big trade. I've missed hundreds of big trades. In fact, I've been out of trades way before I should have been. But you want to make sure that if you really like doing this, you have enough capital to stay in the game. So that's just what I would say. As you get into this, you want to just make sure that you're really managing your money the right way, so you can stay in and you know, live to fight another day.
Awesome, man. Well, there's several thank yous in the chat pane there. Ram says this is the session. This session was what I was looking for. So Dan, thanks for taking time out of your days. You definitely helped one person right now. You've definitely answered questions for several. Man, we've been friends for what, 10, 15 years, and I've never seen your setup. So you helped me too, man. So thank you so much. And of course, we will post this up on YouTube for hundreds of thousands of other people to watch and to benefit. So Dan, you rock. Thanks, man.
All right. Well, my pleasure. Thank you, Brad, for having me, and good luck to everybody.
All right. You rock, bro. I'm going to hit stop now.